Alright, good evening ladies. In today's video I want to lay out exactly how and why Bitcoin could massively exceed our wildest expectations in the next bull cycle. So most people, when estimating Bitcoin's peak in the next cycle, will use the law of diminishing returns. So for example, Bitcoin went from 1,000 to 2,000 from 2014 to the 2018 peak, and then it went from 20,000 to 69,000. So it did a 20x and then it did a 3.5x. So most people would then extrapolate that and say, okay, from the next peak to peak, it's going to do maybe a 1.5 to a 2x, which would put Bitcoin next peak in the range of 100 to 150,000, and that's like a nice conservative estimation of where the next Bitcoin's peak is. So to go from a 20x to a 3.5x to a 1.5 to a 2.5x, something like that. Now I'm going to lay out the case in this video why instead of going from a 20x to a 3.5x to a 1.5x, we're going to go from a 3x to potentially a 5x or 6x and get us up to 300 or 350,000. As we know with Bitcoin, you always have to expect the unexpected. So there's a lot of charts to suggest that this probability is higher than most people are anticipating. Alright, we have a huge amount of charts to get through in today's video, and some of which will blow your mind. Now, let's just dive straight into the first chart, which is just kind of showing that I believe the Bitcoin has 100% definitely bottomed, barring any black swan event like a recession, nuclear war, or something like that. I find it very unlikely that Bitcoin is going to break 15k. We can see these are the last 3 cycles, so we can see the most recent of which at the top in pink, and whenever the Bitcoin price drops below the realized price, that has almost always been an excellent time to accumulate. So the time to accumulate, like the perfect time to accumulate, has already passed us. And if you don't know what the realized price, it's basically the average price that every single Bitcoin has been bought for. So that's like the average buy-in of everyone who's holding Bitcoin right now. So most people are in profit usually, but when the average person is in a loss, that's when Bitcoin is below the realized price. And the realized price tends to act as strong support and strong resistance. So for example, if Bitcoin drops below the realized price and then starts trending back up towards the realized price, that means like the average Joe, if they sell at the realized price, the average Joe will just be net neutral. So they're like, okay, I'm just going to cut my losses here and sell at the realized price. And on the inverse, if it goes up and comes back down to the realized price, all right, I did make gains, but let's just cash out without making any losses here. So this chart is also from the rational route, and I wanted to show this chart because we know Bitcoin has been pumping recently to about 30k, and I want to see, okay, is this a short-term pump like what we had in 2018? So if we look at the red line here, the pink line, this is the chart of Bitcoin's price, and you can see in 2018 we had a large run from about 3,000 all the way to 14,000. So it was quite a nice run in 2018. But we can see actually, if you look at the green line, which is the short-term percentage of supply, we can see that also pumped. So a lot of new people were coming into Bitcoin. So that essentially fizzled out quite quickly, that pump. Now, if we look at today's pump, we can see the short-term supply hasn't increased at all. The only people buying are more long-term holders. There's not an increase in short-term supply. And so on an on-chain basis, that is bullish in the fact that this isn't just short-term holders who are ready to dump when Bitcoin's price starts dumping again. All right, so this chart is where things start to get interesting. So I think I need to explain this chart a little bit. So this is showing the illiquid supply and the total circulating supply. So the total circulating supply includes the illiquid supply, and the illiquid supply is a measure of the percentage of coins that haven't spent 25% or more of their Bitcoin holdings. So if I'm a Bitcoin wallet and I have 1 Bitcoin in there and I've never spent more than 25% of that Bitcoin, never moved any of it, I'm treated as illiquid. And the circulating supply is obviously increasing every 15 minutes as new Bitcoin is getting mined. So the circulating supply is very easy to model. It's just, you can see there, the total supply is in yellow, and the blue is showing the illiquid supply, the coins that aren't moving essentially. Now you can see in the last bull market, or the last cycle, it's the middle right one there, you can see there was the largest gap between the circulating supply and the illiquid supply. So circulating supply divided by the total supply was quite low. Now I'll show you another chart that kind of shows this a little bit better, but you can see in this particular cycle now that we're going into, the illiquid supply is increasing a lot, but the circulating supply is starting to taper off a bit. So, and then in the next halving, the circulating supply is obviously going to, the growth in the circulating supply because of the halving is going to taper off even more. So the circulating supply is going to start diminishing and the illiquid supply is going to keep increasing. So the gap between the circulating supply and the illiquid supply is going to shrink, meaning that there's less coins available to sell. And the inflection point happened in 2020, where there was the lowest ratio in illiquid supply to circulating supply. And that's the theory why potentially the last Bitcoin peak was not the blow off top, was not the crazy bull run that we were used to. So it was a little bit of a flop when it came to Bitcoin's usual price craziness. Okay, so this chart shows it in a little bit more detail. I hope you kind of understanding what I'm saying. Now, these charts are all from the Rational Root, so I'll make sure to link interview he did kind of explaining this stuff more in depth if you want to dive a bit deeper. But we can see at the bottom is showing the percentage of illiquid supply divided by the circulating supply. So the higher the percentage of illiquid supply, the better, meaning like the less people are moving their coins, the less people are selling their coins, the better. Essentially all it means is the more people are hodling, the better it is for price. If demand is constant, supply is reduced, the price will go up. And in the last cycle, we crossed this inflection point that the Rational Root describes. Even though the illiquid supply was growing, the circulating supply was growing even more. But from now on, the illiquid supply is going to increase faster than the circulating supply is going to increase. So that percentage is on a trend back up. So you can see at the moment we're at a percentage of about 80% of the entire Bitcoin supply is now illiquid. So as you can see, the illiquid supply, the real illiquid supply, seems to be growing faster than what this particular blue area model is predicting, or what this blue model area is showing. So he also created this optimistic scenario where instead of just a normal steady incline, steady growth, there's an S-curve. So we had our inflection and now there's an S-curve, and now the illiquid supply is starting to grow exponentially again. And that seems to match what the illiquid supply, the real illiquid supply, is actually doing right now. However, I wouldn't take this to the bank. Like, once Bitcoin's price goes up, the illiquid supply should level off a little bit, should flatten out again, because old coins are going to want to sell if and when Bitcoin's price starts going back up, like what happened in 2020. So just in relation to this point, this is the last chart I'll show you in relation to that particular point about the available supply, about the percentage of liquid supply. So this one just kind of shows it very simply. So we can see in the last cycle in 2020, we hit that inflection point. So you can see in 2020, just after the COVID crash, we peaked at the most ever Bitcoin that's available for sale. Most Bitcoin ever available to trade in this model, in this theory. So the next cycle is going to look a little bit more like 2017. There's going to be less Bitcoin available to sell. As you can see, the 2021 Bitcoin bull cycle, the price was not as crazy as I expected. It's not as crazy as most people expected. A lot of people thought it was going to reach 100,000 plus 200,000 was kind of the consensus estimate. And we didn't even get to like a third of that. About a third of that valuation that people were expecting. Potentially the reason was because of all this extra Bitcoin available to sell, all this freshly minted Bitcoin that people didn't really account for, and the illiquid supply ratio being the lowest it's ever been in history. Now that this illiquid supply is going to start dropping again, we're going to start getting those crazy bull markets that we used to see with Bitcoin. Now that this illiquid supply ratio is going to start increasing again, we might get one of those crazy blow off tops like we got in 2017. So like I kind of said at the start of this video, most people expect in the range of like 100 to 150k for the next Bitcoin peak using the law of diminishing returns. And even I think that's probably still the most likely scenario, but I'm not going to factor out the idea or the potential that Bitcoin could surprise us once again. So Bitcoin surprised us to the downside a little bit in the last peak. What everyone is expecting for Bitcoin is never what actually happens for Bitcoin. So it could surprise us to the upside in the next peak. The other reason our last Bitcoin cycle was quite unusual or quite strange in the fact we had a double top was because of the whole C-19 situation, the war, the interference with interest rates. Everything just went crazy. So Bitcoin price went way ahead of schedule, just boomed up to 40, 50k like that, just went up like a rocket from after the C-19 crash, just went 10x, boom, which was way ahead of schedule. and then it nuked way before everyone was expecting at 69k 1 year later when interest rates started getting hiked. So we kind of got more rounded tops rather than a blow off peak like everyone was expecting. In the next cycle, we're probably going to have interest rates being cut or interest rates being low again in 2 years' time, most likely scenario. Alright, so this next chart is from Plan B, and I'm sure most of you have heard of Plan B. He came up with the famous stock to flow model, which most people thought was broken. But let me just explain what the different lines are in this chart. So first, the red dots, that's actually Bitcoin's price each year. So the red dots are showing Bitcoin's price over the last year since inception. The dark blue line is showing the stock to flow model. The light blue model is just a linear regression that best fit to Bitcoin's price over the years. Okay, first let's compare Bitcoin's price to the stock to flow model, and we can see in the very first cycle, Bitcoin peaked way above the stock to flow model. In the 2017 cycle, same again, Bitcoin peaked way above. But in the 2021 cycle, Bitcoin peaked below the stock to flow model. No one said the stock to flow model was broken when Bitcoin exceeded the stock to flow model. Everyone's like, oh yeah, stock to flow model is brilliant at predicting the price. But when the Bitcoin price went below the stock to flow model, people were like, okay, stock to flow is obviously broken. However, potentially it's not. Maybe the Bitcoin price could get to, like, the stock to flow model is is showing, like, the stock to flow model there is kind of showing a Bitcoin price in the next cycle of about 500k. So like if it gets anywhere near the stock to flow in the next cycle, you know, we'll be laughing, but that could happen. This is kind of some models that are showing the more bullish potential for Bitcoin. Same with the time scenario. The time scenario is saying Bitcoin in the next 2025, a couple of 100,000. So kind of the more conservative estimates. So the thesis is very simple. Over the next 2 years, interest rates will have to be cut again. The money printer will go back on and Bitcoin will start going up. And from these charts that I've just shown you, it's a possibility that people are going to be more conservative than what actually happens. So there is a higher than expected probability that Bitcoin exceeds expectations in the next bull cycle. So if this scenario plays out, everyone who didn't sell in 2021, who didn't take any profits in 2021, thought it was going to go to 200k, is going to be very conservative in this next bull cycle. Take loads of profits way too early at 100k or 150k, and the Bitcoin's going to go to 350k, and obviously altcoins, everything's going to go crazy after that. So those people are going to be kicking themselves that they sold way too much way too early. Now, I don't recommend not taking any profits whatsoever, but I wouldn't sell everything at 100 or 150k. That's what kind of my conclusion has been from seeing these charts, that don't be ready for be prepared for the unexpected. The unexpected to the upside could happen. Don't sell everything in the next bull cycle. Maybe sell everything at 300 and 350k or 500k if it managed to get that far, but don't sell everything at 100k. Just take profits slowly, but do take profits. Alright, I really hope this video was interesting and helpful for you. Best of luck in the next bull cycle. See ya.